What is going on, investors? Back again, another stock analysis. This time we're taking a look at Visa, ticker symbol V. Full disclosure, I own shares of Visa. Now, take a look. This stock just reported earnings after the bell today, and the stock sold off a relatively, I wouldn't say this is heavy sell-off, but we are seeing a sell-off of shares in the after hours. I'm going to take a look at the chart. I'm going to tell you what price I would look to add some more shares. We'll take a look at the revenues and stuff, and then we'll take a look at the reasons why I think the stock is selling off. Now, before we get all to that, let's just take a broad overview of Visa. We've got a $432 billion company. This is one of the largest companies in the world. PE ratio at 35. I went back and checked. You're not really getting this stock very often, much lower than this. We made these March lows at about 145, 146. At that time, yes, the PE ratio was lower, but it wasn't quote unquote low. So I wouldn't wait to get this at low earnings, and earnings are going to be probably under pressure for the next few quarters at least. And so I don't see this PE ratio driving down. Now, forward yield is a paltry, tiny 0.061%. You might even find savings accounts, maybe, that'll give you about that much. That's $1.20 per share. But here's what I want to point out about the dividend. If you have a long-term time horizon for Visa shares, take a look at where the dividend started. It started at 10 cents back in 2008, and now it's all the way at $1.05. That is a 25% growth rate. Notice over the last year, it's grown 20%, it's 21%. It looks like to me, management, at least current management at Visa, is trying to grow the dividend 20% per year. So if you have a long-term view of Visa and you can pick it up at a good price, chances are they're going to grow that dividend 20% each year. That is extraordinarily powerful when you reinvest these dividends and then they go up. Over time, you're going to grow your wealth very nicely. Now, I know the dividend isn't low from a yield or isn't high from a yield perspective, but like I said, you're buying it for this dividend growth. So when you're an old man like me, or even a grandpa or something like that, then you can come in here and your dividend yield is much, much higher because it is grown with your shares over time. Like I said, we'll come back to this stock chart. I'll tell you where I'm looking to buy shares. Let's jump into the most recent quarter. So we have 3 months ended here, June 30th. We have 9 months ended here. We see revenues tick down about $1 billion. Okay. And then finally for the 9 month ended, it's actually relatively flat because this includes parts of the year that were actually relatively strong for Visa. Now, they've kept costs, I wouldn't say under control, but they were about flat, maybe down just slightly quarter over quarter. So that did put pressures on operating income, which came in right at about $3 billion compared to much closer to $4. From a net income perspective, still strong. Okay, this stock, this is why you don't see it falling off a cliff like maybe some other stocks out there, is they had $3.1 billion in profit in the previous period, and in the most current quarter, we had call it 2.4. For a 9-month view, you're almost flat here. You had to call it $9 billion compared to call it $8.8 billion. And here's what I'm talking about with this earnings per share. I think the Class C shares is what's traded on, like the average person can buy the Class C shares. And as we see, earnings per share here was $5.48, and that's just for a month. Okay, even in a difficult quarter, they earned $4.29 per share. And take a look at these earnings per share on the Class C shares. This is for 9 months. They earned $15. And take a look. Again, the dividend is $1.20. They have tons and tons of room to grow this dividend. So that's exciting if you're a shareholder. Moving down through here, we'll take a look at the cash flows. What's also should be exciting if you're a Visa shareholder or potential one are these cash flows. Take a look at the previous period here, 9 months. We were at $8.7 billion. Now, boom, we're up to $8.3 billion. So cash flows stayed relatively solid as well. Finally, investing activities ticked up quite a bit. Looks like they proceeds from maturities and sales here. Looks like they benefited from something there, although they benefited from the previous period as well. They just had less. They didn't do an acquisition. It looks like this quarter they did a very small one. So things are looking pretty good from investing activities, especially when those are compared to cash flows. And then finally, from financing activities. So we have repurchase of Class A shares here. We have the dividends paid here. So those are going up. Those are going up nicely. And, again, you want to see that. And they have plenty of cash flow to cover this. Look, $2 billion in dividends flowing out, but we have $8.3 billion of cash flow in a difficult quarter. So financing activities, we had $9.4 billion in the previous period that flowed out, and we had 4.7. Notice that we issued some senior notes here at about $4 billion. So they did a little bit of a fundraising. So that should shore up the balance sheet just a little bit. And we'll fast forward up to the balance sheet really quick. So here's our balance sheet over at Visa. We see, almost $4 billion that's being added here. We know that's from those senior notes. Now let's come down to debt. So we have long-term debt here of 17.8 that ticked up a little bit. Current maturities of debt here at 3. So from a debt perspective, it's not bad. It's not great, but they have plenty of cash. Okay. They have 17 billion plus a current of 20. That makes it about 21 billion. But they've got, 13.9. They've got some investment securities here. Some of this other stuff is almost like cash. And so they've got plenty of cash on the balance sheet. This is a company that's healthy from a balance sheet perspective, healthy from a cash flow perspective. What is not healthy right now is the consumer, but probably both literally and figuratively. Take a look at this. This is for 3 months ended in June. Okay, so this is June. This is a period when a lot of the world was shut down. Look at these growth numbers just falling off an absolute cliff. The U.S. held up actually better than almost everywhere else in the world. This is another thing that I like about Visa. It gives you exposure to Asia Pacific, Canada. This is probably, I don't know what that stands for. Latin America, probably Europe. So you're getting exposure to everywhere. And so that's what I like about Visa is this is a global company. And obviously, most of your exposure is here in the United States and then Asia Pacific, but you're getting some exposure even in Europe as well. You're getting some nice exposure. Take a look at the 3 months, just a comparison. Here's 3 months ended in March 31st. Obviously, the tail end of March really hurt the US a lot, but other countries were shut down too. But notice the spending was fine. It was really this most recent quarter. People just really were not using their Visa for probably a number of different reasons. But I just wanted to point that out to you. Now, finally, where are we going to buy shares of Visa? I think this graph includes the after hour. Yeah, we're down to 193. That's about where we're at here. We see here the stock, like a lot of stocks, ran up right before March, and then boom, it crashed down. I think I didn't get shares all the way down here. I think I got shares somewhere up in here. But this stock, like a lot of stocks, a lot of healthy stocks, a lot of good performing stocks really rallied up here. Now it rallied up to this point, and then we made a gap here. I wanted to point out this gap here. And this gap has been cut. The top of the gap has actually been retested here, 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 here. So we've tested it 4 times, and it has provided some support. So if you want to get in here and get shares, I would look at that like 188. You could maybe even call it 189 area. So about $4 less than where we're at. And this stock might break trend just a little bit. This stock, if the rest of the market rolls over a little bit, we got a lot of earnings coming up this week. It's possible that a bad Apple report or Amazon could send the stock market rolling over just a little bit. And I would think right in this 188, 189. Now, I think even better if you have a lot of patience and you want to really kind of roll the dice is down here at the 184, 185 mark. I think there you should see a lot of supports for shares here right after this gap. And, right when this gap started, you should see some demand here. This is where I personally, if I wanted to add more shares of Visa, I wouldn't say I'm overweight Visa, but I have enough shares right now. So this stock right now is in the middle of this range, and we've seen this with a lot of stocks. They don't really have the energy to push higher, but there's not really a catalyst to push them down as well. And so we're kind of in a holding pattern. For me, that's not always the best time to accumulate stocks. I like to accumulate stocks when things are things are bad. I mean, you're trying to buy low and sell high. You're not really trying to buy in the middle. Now, although if this stock breaks up, the market gets positive, we have positive vaccine news, this stock could easily come back up here and retest these highs up into the $200 range, maybe even higher than that, all the way up into the 210s. So there is some upside in these shares. I think your downside's not super low on this. I think this is one I would definitely put on your watch list. You're probably $5, $6, $7 away from potentially buying this one. So that's what I would do. This is Visa. A lot of exposure here. I would only buy this if you're looking to hold it for a very long period of time. I think that's where your risk reward is really going to be rewarded. Like I said, I showed you this dividend growth. They're growing the dividend on this stock by 20%, essentially 20%, 25% a year. That is exactly what you want. That is exactly what you want to invest in. And this is what you're going to get with Visa. So if you have a 10, 15, maybe even 20, maybe even 30-year time horizon, I would pick up a couple shares of Visa and just let the dividends do their work over the course of your life. So there we go. We'll be back later this week. We've got Amazon, we've got Apple, we've got Facebook, we've got Shopify. There's tons of great companies reporting this week, and they potentially could move the markets up or down depending on where they go. We'll be covering it for you here on the channel. Maybe consider hitting that subscribe button and that like button as well. Thank you for everybody growing my channel, over 7,000 subscribers. A couple months ago, I think I had like 1,000. So I really appreciate that. And we'll be back soon. Good luck with your investments.